Shares of Apple up about 1% in today's session. Moody's upgrading the tech giant's credit rating to AAA with a stable outlook thanks to its substantial operating scale and strong customer loyalty. And this as Citi bumps its price target for the stock to $200, expecting continued strong demand and new product launches like its AR/VR headset in 2022. But there are some headwinds. Loop Venture analyst Gene Munster says supply chain challenges could end up costing the tech giant $2 billion more than expected for the December quarter. And Gene joins me now with more of what he sees ahead. Gene, I hear what you're saying, but square this for me. I'm looking on Apple's site right now at the iPhone 13 Pro, just clicked in a few things, and it says I could get one delivered tomorrow, or I could order and pick it up in store on Friday. I mean, that sounds a lot better than it was a few weeks ago. What's going on?
Well, John, the conversation from my perspective starts, I just want to anchor it that I think demand for their products is great. And then we talk about the supply side, and it has improved. You mentioned one example. Based on our math, it's down to 1 day. A month ago, we had that measured at 9 days for the average iPhone. So we look at the average iPhone 13. We look at 10 products, Apple products over 6 countries on a monthly basis. So that's our methodology. So I first want to square your data point with my data point, which is we're on the same page. As iPhone has improved a lot. It's a big part of the December quarter revenue. It's 60% of revenue. But the issue, the challenge here, the $2 billion question in my case is you have to look at the breadth of the product line. So that is an improvement. The watch has improved. But then on the flip side, you have the iPad. The new iPads, they're 42 days out. A month ago, they were 40 days out. I've never seen anything quite like that. That's obviously because demand is strong. And then separately, the new MacBook Pro, I measure it at 25 days out. A month ago, it was 18 days out. And I think when you put this together, you come up with a picture that if you look at the bulk of the buying for Apple in the December quarter, it really comes before December 15th. It's that November 15th to December 15th. And so a little bit of the iPhone improvement, a little too late, it doesn't change the fact that I think the vast majority of this lost sales is going to push to the March quarter.
Interesting. I wonder, based on the loyalty that Apple has long commanded, though, if people are visiting stores, which are largely open, unlike last year, for example, might they shift their buying intent from something that's out of stock, like that MacBook Pro, to something like a watch or a phone, which they might not have expected to see, but oh my goodness, here they are in stock? Might that play to Apple's advantage here?
It will. I mean, they're going to pick up, especially during the holiday buying period, you're going to see people that will forego the newest product just to get a product. The iPad's a perfect example of that. There's better availability of the older iPads. So I think that dynamic does put into play. But I want to bring it all together when we think about these lead times. And I've followed them for a long time, and I think that there is some insights that you can gain. If you look at the average lead time for new Apple products as it stands today, it's 16 days. If you look at, that's an improvement from 20 days a month ago. So it has improved. But typically at this point, after essentially the holiday period, the buying period is done, at this point, we'd be seeing lead times for new Apple products in the 2 to 4 day range. So they were still an order of magnitude greater. Apple guided that it would be a higher number than 2 to 4 days with that $8 billion headwind.
Right.
I think this is going to come into a little bit bigger headwind. Investors should be aware of it, but ultimately shouldn't be worried about it.
Shepard Smith here. Thanks for watching CNBC on YouTube.